The California housing market is changing, but does that mean a housing crash is on the way? We've seen the median home price recently rise, but at the same time, we're getting conflicting information because the number of sales is actually going down. At the same time, we've got interest rates rising. We've got affordability becoming a problem for many home buyers out there, which is causing supply to rise. So what does this mean for California? What does it mean for the housing market? What does it mean for you as a buyer or seller? Well, in today's video, we're going to go over that in detail. We're going to look at the most recent data out there from the California Association of Realtors, as well as Redfin. And then I'm going to give you some boots on the ground information from what I'm seeing as a listing agent out there representing both buyers and sellers. So hopefully it can help you make rational decisions in this crazy market. My name is Jeb Smith. I'm a real estate broker here in Southern California, and I'd like to ask a favor before we dive into this information. Do me a favor, hit the thumbs up if you find any value in today's content, and feel free to subscribe if you want to stay updated on everything real estate related. Now, as I started the video, I mentioned that the median home price is continuing to rise, and it is, but the number of sales is actually going down. Why is that? Well, part of the reason that you have the median home price still rising is because you're having more sales on the higher end of the scale. So when you have more sales at the luxury side, it's going to raise that median price. But why are the number of sales going down? It's partly due to sellers somewhat being locked into their properties because many people out there refinanced last year into a super low interest rate. And now they're looking at home prices rising, and or even if they're flat in their market, they're not any lower than where they purchased previously. At the same time, they have a super low interest rate. So in order for that person to consider selling, they have to be willing to take on a higher price and also a much higher monthly payment, as the average monthly payment has increased nearly 35% in just the last year. So you have sellers staying in place, not putting their homes on the market, which is causing inventory levels to stay low. But at the same time, you have affordability issues right now because interest rates have risen, nearly doubled in just the past couple of months to somewhere in the mid 5% range. You have affordability being a question for a lot of home buyers out there. Many people have been priced out of the market. So those buyers are no longer out there searching for homes. And then there are buyers that are continuing to search, but maybe their prices have changed. Maybe they're not able to find what they're looking for because in the big picture, inventory levels are still low. While we've seen inventory levels increase, they haven't increased to a level that has really slowed housing at the moment. And so with that said, you have buyers out there that still can't find the right home. So with all of that said, there's just less people actually closing on those homes due to a lack of being able to find what they want, due to a lack of sellers willing to sell. And because of that, the number of home sales is actually declined. Before we talk about interest rates in a little bit more detail, I want to talk about some market stats. What's actually happening out there in the housing market at the moment. A moment ago, I mentioned supply is still historically low. Right now in California, we sit at about 1.7 months of supply. A balanced market is about 6 months of supply. So supply is still very, very low. While it has been rising, it still hasn't reached a level that's going to balance the market. More importantly, not in a level that really favors buyers. Now, that doesn't mean as a buyer out there, you can't negotiate, you can't get a good deal, that you have to go way above the asking price and do crazy things. It doesn't mean that at all. In fact, there's less of that in this market, and we're going to talk about that in just a minute when I talk about, my boots on the ground experience over the last couple of weeks of what's going on. But it does mean that sellers still have control, and that's what I want to point out here. While active listings are at a 5-month high, we still have the average home going into escrow after just 8 days on the market. At the same time, we're seeing the list to price ratio close somewhere between 104 and 105%, depending on whose data you're looking at. In fact, you can look at this chart here and see that going back as far as 2018, the average home sold at nearly 100% of the list price, even prior to the pandemic. What happened during the pandemic is supply dipped, people were able to, change their living situations, work remotely, all of the things that we've talked about in other videos, and that put, pressure on housing along with low interest rates. which fueled the frenzy out there. And that's when you started seeing people offer well above the asking price, which is getting that average list to price ratio at what we're looking at here now between around 105%, which means you buy $1 million house, you're paying nearly $1,050,000 for that property. And I've told stories, and I'm sure you've heard of stories, where homes have sold well above that 5%, in some cases 10, 20, 25% above the asking price. But what you're likely to see over the next couple of months is the housing market continue to slow, and we're going to talk about why here in just a minute. Now, as many of you know, the real estate market is cyclical. And the spring market is typically the hottest time of the year. It's when the most inventory comes on the market. It's when we see the most action in the market. Now, the summer gets the credit because that's when the most properties close. But most of those properties go into escrow April, May, and June. They close somewhere between July, August, and September. But typically during the summer, we start to see less inventory come on the market. But at the moment, we've got inventory levels increasing. In fact, here in Orange County, I've seen the inventory double since the beginning of the year. We're sitting at somewhere around 2,100 homes at the time I'm filming this video. Now, that might seem like a lot of property because, at the beginning of the year, we started around 1,000 homes. But historically speaking, we're usually sitting somewhere around 3,500, 4,000 homes during this time of year. Last year, we were sitting around 2,600. So we're still well below where we should be, but we are seeing those levels increase. At the same time, we're seeing interest rates continue to rise. In fact, the Fed has come out recently and said that they're likely to do a 0.5% hike over the next 2 meetings. At the same time, they're looking to let their balance sheet run off, which means that interest rates could continue to rise. Now, I'm personally under the belief that interest rates are somewhere near the peak. Now, that doesn't mean they're going to come down immediately, doesn't mean they can't go up even further. I just think a lot of the volatility that's in the market at the moment has caused those interest rates to rise. And I believe as the Fed actually executes on what they have said they're going to do, I think you'll see that volatility subside a little bit, and hopefully interest rates will retrace a little bit. That just means they're likely not to continue going up at the pace that we've seen over the last couple of months. But with that said, inventory levels are up, interest rates are up, which means if you're a buyer out there, it's actually a little bit better buying opportunity than it was 6 months ago. Now, it's going to cost you more money to get into that home, but you have more options to choose from. And we've been talking about this for a long period of time. A lot of people out there believe that because I'm a real estate agent, I want to see home prices continue to rise and buyers do crazy things and sellers make all of this money and be super egregious. That's not the case at all. I love a balanced market, one where it's fair for buyers and one where it's fair for sellers. And we haven't seen it fair on the buyer side in quite some time. But I do believe as more supply comes to the market, you're likely to see some calming, some changing, a little bit of slowing down. And that's what I want to talk about right now. As a buyer's agent, as a listing agent, I've recently had the opportunity to represent buyers and sellers in this market. And on the selling side, it's taken a little bit longer to get offers on properties. The calls aren't coming immediately like they were a couple months back, but there's still a lot of activity. What I want to say is I just had a property fall out of escrow today, potentially fall out of escrow. It hasn't fallen out of escrow yet. This property was listed at $900,000. We accepted an offer at $950,000. Buyer was putting a lot of money down. They waived the appraisal, all of that good stuff. And the appraisal came in fine. There was no issues there. But the buyer's having issues with their loan because of how they document income or what have you. So the agent reached out to me and said, hey, look, we might be canceling. So I reached out to the other buyers, that had put offers in on this property. Originally, we had 6 offers on this property. And 3 of them were pretty close to the price that we accepted. And so I reached back out to those buyers or the agents of those buyers. And this was a couple of weeks back. This was 2.5 weeks ago. And the market has continued to change since then. A little bit more inventory, a little bit higher rate. And all 3 of the agents that I reached out to, their buyers were ecstatic and ready to move forward. Even though there's more inventory out there, even though interest rates are a little bit higher, and they're willing to come in at the price that we had in escrow, which is $950,000. So to me, that shows that buyer demand is still strong. Now, it might not be what it was 6 months ago, but there are buyers out there still looking. At the same time, I recently listed a property this past week, and typically I'll put the home on the market on a Wednesday as a coming soon, make it active on a Friday, do open houses, and not allow any showings until those open houses. Well, I had an agent call me the very first day. Hey, I have the perfect buyer for your property. Can we get in there early to see it? So on and so forth. So the activity out there is still very strong. Now, we're going to do the open houses this weekend, and I'll be able to tell you exactly what happened in a video here very soon. But I'm seeing activity still move out there. So if you're a buyer and you're watching the market, just understand it's still competitive. You might not have to go way, way, way above the asking price, but you may, depending on the property that you're looking at. So don't just get caught up in the headlines. Understand that the market is still in favor of sellers. But you still have to be competitive. You can't just come in with a lowball offer just because a property's been on the market 5 days or 10 days, and where properties were selling at one day, doesn't mean the seller is going to accept a much lower offer. They may, but they may not. So just understand the market that you're in. Now, a lot of you often ask, what are the most competitive markets out there? Well, take a look at this here. You can see the markets that are seeing the highest price increases at the moment. Many of these are in Orange County, where I'm located, and even outside of Orange County, down in Riverside County, where Palm Springs is located. But because of this, craziness in the market and how quickly things are moving, we've actually seen the median home price in Orange County peak above $1 million. And to me, it's hard to believe that that's sustainable long term. I think things have to, pull back. Things have to calm down. If you've heard me talk in other videos, we've had a 60-year trend or so where home prices have appreciated around 5%. And over the last 2 years, we've seen homes appreciate nearly 40%. So at some point, I do believe that home prices have to regress back to that trend. Now, I don't believe it's going to happen immediately, but I do think at some point, home prices do have to pull back. So just some things to keep in mind. If you're a buyer out there, it's not always a great time to buy. Probably crazy to hear from a real estate agent, but it's a great time to buy if it's the right time for you in your life. So just keep that in mind. Now, at the same time, if you're a buyer in Northern California, look at the most competitive markets up here on this chart. Many of these markets are around the Bay Area. I often have people reaching out to me, what's happening in the Bay Area? Well, according to this, that's where the most competition is in that market. So if you're in one of these markets, you might have to still waive contingencies, do crazy things in order to get your offer accepted. But a lot of what we're seeing at this time takes weeks, months for it to actually affect the market. Rising interest rates don't affect the market immediately. I mean, I guess they do because some people drop out, but you don't see it in the charts, in the trends, until it has time to work through, which is likely to take weeks and months from now. And as we move into summer, summer is usually a time in the market where it starts to slow down. People are on vacations, usually less inventory coming to the market during that time. So you're going to have less inventory coming to the market, potentially interest rates where they are now. Could be a little bit higher, maybe a little bit lower, hard to really say, but interest rates are going to be higher than they were this time last year. So you're likely to have less sales during that time. So you're likely to see continue slowing over the next couple of months. Now, that doesn't mean a crash. It doesn't mean anything like that. It just means if you're in the market, know what you're looking at so that you can make the right decision for you. But if you're a buyer or seller in California, you want some more information on what's happening in California and my thoughts in more detail, do me a favor, check out this video here. I dive into it in more detail. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.